afternoon, everybody. Welcome to the TraderMerlin show. Really weird what just happened right here. I wasn't sure I was going live yet, but apparently here we are live for your Monday edition. It is the 13th of May today. Happy birthday, my good friend Scott. Just make sure you guys can hear me here. Just type in the chat. You can hear me because I had a weird snafu when I started the show. Anyway, as we go through this one today, kind of exciting. Not a lot happens that I get really excited about. Mainly the markets just kind of become boring, Groundhog Day, occasionally a small piece of economic announcement, which might give us some opportunities. But in large part, it's really just kind of boring, right? It's just like, okay, well, this day is slightly exciting. This is totally different today. I'm excited today because obviously I'm not a voice in the markets. I'm this tiny little person who I trade and I have my own little world going on, and it's really about my trading, and I have a community of people that enjoy listening to me talk about the markets and like engaging, which I appreciate, but I am by no means an influencer swaying the markets. Roaring Kitty, on the other hand, was somebody that built this colossal following, which has massive impact on the markets, and it's like it's welcome back. And I wasn't a big Roaring Kitty follower back in the day, but I can assure you I am now. And the reason for it is it's creating extreme volatility in a segment of the market that I don't really care about. I could give a crap less about these meme stocks, GameStop, AMC, and just countless others, but it does create some excitement. Now, for the first time in 3 years, we have now seen the kitty back. And I see here in the comments from Lisa says, I have to wonder, the kitty went through so much legal stuff. Is he really back? No implications. I'll be honest, I don't see him as having done anything wrong. I mean, I didn't watch all the trial, I watched pieces of it, but what did he really do wrong? He was basically talking about why he's buying GameStop. And he showed all the numbers, and here's why. And people followed onto that, and they kept following and following and following and following and following. And is that Roaring Kitty's fault? I don't know. I don't personally think he did anything wrong in that stuff, so he shouldn't have been busted, in my opinion. But what sort of things did he concede to and say, okay, I won't do this on social media? Well, if you look at his social media account, it all started last night, Sunday night. Let me just scroll down to this post here. This is the one that he that just had everybody going crazy Monday morning. And if you look at the picture, basically it means it's a great graphic, actually. It shows someone was sitting back in the chair playing a game, but now he's leaning forward. And typically when someone's really like playing the game, they're into it, they're leaning forward, they're paying attention. And then it's followed up by countless videos that are all about like, here we go, starting things off, and it really kind of makes me feel like he's going to become a much more impactful person with regards to market recommendations, market calls. I welcome it. I'm excited. So if you think about what happened in the markets over the past couple of days, it's crushed certain meme stocks and these heavily short interest stocks, which I talked about a while back on. When you have something that has such a high float of short float, it does present an opportunity. And someone got caught because I saw a question came through today from Gary. And Gary asked me, he says, I've been short GameStop for over a year now. Things are going great until the past 2 weeks. What would you do if you were short right now? I'd be quaking my boots. I would be quaking my boots right now if I was short GameStop. So let's take a peek at GameStop's chart. And let's forget what happened over the past 2 weeks and just zoom out here. Right, you can see going back to your daily, there was that big surge that Roaring Kitty was talking about buying this, GameStop back here when it was at a split adjusted 66 cents. And then that thing just shot up. I mean, at high price, just over 120 bucks. But again, that's split adjusted. That was after a 4-to-1 split. So it was almost 500 bucks per share for GameStop. And you guys remember I was going off on GameStop. There's no way this thing should be worth 500 bucks. And then you see that chart just drifted lower and lower and lower and lower and lower. And all of a sudden, over the past couple weeks, you've had this big surge. Why is that? Well, the short interest on GameStop, I believe, is still around 25 or 30%, which is still relatively high. So Roaring Kitty didn't say a word, not one word about a company today. There wasn't one company listed or pictured in any of the videos that I watched. But people are now going, he's back. He was a huge supporter of GameStop's valuations and fundamentals. Therefore, they're looking for the short squeeze pop again. So this was a huge one today. I believe, 74% is what GameStop was up today. And if you look at from where it closed out on Friday's session to its peak today, you had a gain on GameStop of 118% in a day. So to Gary's question, what would I do now if I was in GameStop? I wouldn't sit around for this. I would probably close out my trade. Now, my guess is it's going to come back down a little bit, but if Roaring Kitty starts tweeting out anything about GameStops or specific securities, they're probably going to go nuts. And it's bringing back, in my opinion, the whole meme stock short squeeze chaos that happened back in 2020. Fine, great, welcome it. Personally, I'm not that impacted by it. I don't find myself being caught up in the hype and buying meme stocks. If anything, I might be looking at shorting those at a certain point. Yeah, AMC was actually even bigger gainer today, Margaret. Let's go look at AMC here. AMC had a 78% gain today. And I mean, look at that. Just one day, you erased months worth of losses. And if this does continue, you might see AMC back up at that $10, $12 mark. It's not impossible or inconceivable that would happen. Now, another thing that's interesting here, I'm going to bring it up. This is why I think there's certain people you should follow on Twitter, and one of those is Bar Chart. Of course, Bar Chart has Thomas, who I think runs their social media, does a fantastic job. It's always just awesome content, and it's just a lot of little tidbits of knowledge, I think, that at least for me, give you ideas and things like that. Let me go and here you go. So if you think that GameStop is a short squeeze candidate, that it's going to pop, it's got a short float. Again, I think it's about 24, 25, maybe 30%. The reason it shot up so much before was the short interest, the float short was 140%. You had more than all the shares possible were shorted, which in my mind is criminal. So there are a couple other ones on here that I would look for. So to Gary, I would probably get out of my position. Other stocks like here's your list from Bar Chart today. Look at SunPower. So SunPower has 95.2% of all the shares are short. That means that almost everything is short. And you can see quite a few here. We talked about Beyond Meat last week, even though I made an error with BYND and BYON. Beyond Meat has 41.3% of their shares are short. Phantom Pharmaceuticals, 41.9%. Alta Immune, 41.9%. You move up this list, I don't see any other names here I really recognize. I've heard of Arbor Realty Trust, down 42.5%. But, GameStop's not even on this list. You saw this on NBC? Nice. That top list there, SunPower, SPWR, I believe is that ticker symbol. Can bring that one up. These guys right here got to be quaking in their boots right now, because this is probably the most attractive short squeeze candidate in the market with 95% of those shares short. The amount of losses today on SunPower, huge, but keep in mind, this is a $2.75 stock right now. It's up 19% on the day. It's already up another 1.5% in the after-hour session. To me, if you're looking for something to get that short squeeze hype chaos going on right now, it's SunPower, SPWR. Now, I'm not buying it. I don't touch that type of stuff. It's too unpredictable. And while I'd love to have a 300%, 400%, 500% gain in a short period of time, I'm not taking the risk of it either. Because if you buy long SunPower at 275, the long-term prognosis is probably bankruptcy. I mean, just look at the weekly chart of SunPower here. I mean, that is atrocious. This is a hideous-looking chart. It was back up at its peak back in 2021, so not even that long ago. Its high price was $57.52, and here we are now trading at $2.75, and it hit as low as $2.17 just a couple weeks ago. So, this one could have great potential for a short squeeze, and I think a lot of these stocks could have big pops. And any comments made by Roaring Kitty are going to be huge movers, because not only was he popular back in the 2000 or 2020 when he was doing the GameStop one, but he's probably found other beaten down stocks. Who knows? Maybe he starts tweeting about SunPower. Maybe in the issues that happened on Capitol Hill when he was testifying, I saw that no charges personally against him, but there might be some restrictions on things he can and cannot say on social media. Maybe he can't mention specific ticker symbols. I don't know what that may be. But I am very excited that he's back. I think you're going to see a lot of volatility and excitement in particularly these meme stocks. So we'll keep an eye on this list right here. I don't know the ticker symbols for a lot of these ones. So what I'll do tonight is, I will bring up this list and put it into a spreadsheet. And just keep an eye on what's going on with some of these over the past couple months, and then see what it looks like from this day forward. My guess is a lot of the short squeeze stuff is going to start to pop. And it's not just that the institutions are are freaking out because Roaring Kitty is back, right? I think they're looking at it going, if Roaring Kitty is back, who's been this big advocate and pusher of short squeeze, then we don't want to be holding something short that has such a high short float. So like if I'm any hedge fund that's short SunPower, which probably is going to go bankrupt at some point, I'm going to buy back my shares short now just to protect myself. It's a floater. Down, down, down. Yeah, poke it with a stick, Sly Dog. Poke it with a stick. So I would reverse short also. Yeah, I think that anybody who's got SunPower short right now, or anything short in any of these companies I've got here mentioned, even AMC and GameStop, you run the risk right now of monumental shots to the upside. No, Margaret, I can't. I'm sure there are subscription services out there. Margaret asked, are there places we can see who has the most shorted? It must be disclosed, right? It's got to be disclosed somewhere, but I don't know where exactly that would be. My guess is it's probably behind like a Bloomberg paywall. You could probably find the breakdown of who is short these things. Yeah, most likely it's big institutions, right? You don't see a lot of Robinhood traders short stocks. They're mostly buy and hold investors. So institutions are going to be the ones that are short this, and there's a big potential to get smoked today. If you look at just today, on some of these, SunPower was up. Well, might be old. Almost everything's posting significant gains in that meme stock category. Now, one thing that you could do, I don't pay for the advanced version, but let me just go here to FinViz, and I'm sure there's many other sites for it, but I always like to use FinViz just because it's a clean, easy site to use. If you go to FinViz and click on their screener button right here, you can go down to float short, and I'm going to go over here and say over 30%. That would probably weed out GameStop. Let's even check and see if GameStop is on this list. My guess is GameStop is off this list. Yeah. So GameStop isn't over 40%, but Kohl's is, or over 30%, excuse me. Kohl's is, Lucid is, iRobot is. Man, there's some companies in here that might make for good opportunities here. Guess is, a lot of retail companies looking pretty bad. And then here's SunPower. I believe SunPower is probably the worst of the bunch, but this is a way for you to kind of filter through and find out which ones have very high short float if you are playing that game. Personally, I think it's too risky. Don't go short any of those companies yet. But look, if SunPower does what GameStop did, all right. So here's what I did with GameStop back in the day. Let me bring up GME. The premium on GameStop was so elevated that the numbers are all skewed here because it did a 4-for-1 split. But I remember when this thing peaked out here and started falling like a rock. Let me go to a number I can times by 4. So here's $15, times that by 4. That means I could have bought that was $60, right? At the time, I was when it was $60, I was selling the $25 puts and getting like 10% for a very short window of time. The premium was astronomical because the volatility was so high on GameStop. Now, I didn't want GameStop. I wanted nothing to do with it, or AMC. But there may come a point where I do play these, not to be an owner, but to collect just overly inflated premium, like to the moon Alice type of premium on some of these stocks. Now, I'd be real careful with that one, all right? Don't put all your eggs in that basket, because if you do get stuck with some, like I did with First Republic, you could ride that baby all the way to zero, as I did with First Republic. So you got to be careful with some of those high flyers with extreme volatility. There's a reason that the premiums are so high on things like GameStop, AMC, or anything on that SunPower as well. So there we go. If inflation comes out higher than expected, this could be a GME reversal. Well, if inflation comes out much higher than expected, it's going to be an overall market reversal. Where's my... I'm trying to torture you with my scrolling. My apologies, everybody. Yeah, I do think that you'll see GameStop come down a little bit, but this just looming in the darkness, knowing that Roaring Kitty is back. And it's not like he just posted one picture. He has been posting all day long. Now, maybe he's working with somebody. Look, if I'm Roaring Kitty, I would start a subscription service, and I would, because he's already got, how many people he's got following him. It's got to be quite a lot. Here's his his Twitter handle. He's got 800,000 people. At 800,000 people, you could do very good by just starting a simple subscription service. And I'd put it behind a paywall. And, all these things are movie clips just talking about, battles and fights, and it's great. I'm pretty excited about it. Not sure inflation affects meme stocks much. No, it doesn't, but what it could do is create you're right, inflation is irrelevant for the meme stock, but what it does is it creates that overall market panic of like, oh no, we're going to get maybe rate increases, and then that rising tide, so to speak, will float all the boats to the downside. But yeah, there is a level of immunity with regards to meme stocks. They're fun, they're exciting, but I don't do it. Very rare will I get involved with a meme stock, but I think that the meme stock fun is now back center stage because Roaring Kitty's back. So hallelujah, give me something fun to watch. Add him on social media, add him on Twitter, just to keep an eye on him, and maybe even join the Wall Street Bets room as time goes forward. Okay, what else do we have? Two other things that I found really interesting. So I've been watching the price of two commodities in particular, coffee and cocoa. Now coffee, as we talked about, the price is falling significantly. Yeah, Lisa, no YOLOing for me. No. You don't live once. Someone said that this weekend, Lisa, and I had to disagree. It says YOLO is you only live once. That's BS. You die once. You live every day. So change of heart. I think when you're in your 20s, you think it's YOLO, but no, when you get older, you realize I'm living every day. Yeah. Last thing I want to do is get caught, folding full bags on GameStop as it drops 50% and I lose everything. So no way I would ever do that. Nope, not for me. But for some of you, might be your bag. So going back to cocoa and to coffee, one of the reasons that I was okay and fine to sell puts on Starbucks is I was watching coffee roll over. So Starbucks has been doing well over the past couple of days. They had cocoa from inflation report. Cocoa's not that big of an impact on the inflation report, Oliver. Not that big. But I have the $71 puts right now on cocoa or on Starbucks. I wish that I had sold more of those because I don't think I'm going to get to 71 by Friday. I actually think we'll start to close this gap, and I wanted to be long Starbucks. And the main driver for that was, number one, big panic, oversold situation off an earnings announcement. And the second piece of that being the futures side. So let me go here and close up some of my windows. What I got here? Where's my soft? So here is coffee. So coffee's come down quite a bit. It actually had a small bounce over the past week, and now it feels like we're going to break and make even lower lows. So this to me just speaks volumes to better profits for Starbucks the cheaper coffee gets. So definitely watching that one. And the other one that I'm watching and is very interesting is cocoa. So cocoa had been going crazy, and this, of course, is the base for chocolates here. And just watching that up move is really one of the most incredible charts. Let's just go back. Let's go back to the price of cocoa going back to late 2022. So we're talking less than 2 years. Cocoa had risen. 431%. What? 431%. Unbelievable. And now all of a sudden we're seeing a nice retracement. And you're wondering, well, what on earth happened here today? It comes largely from the Gold Coast of Africa. And it's been very dry. It was not very good for the growing season. And people are worried that we're going to have a horrible harvest. And therefore the prices of cocoa are going to go through the roof. This is why, commodities are a different beast. I'm curious, how many of you of this room can I do that poll this way? I don't know if that works this one. So new poll. Let's see. And when I say, let's see, do you trade soft commodities? Okay, so there's the poll. And I'm going to put that one in the chat. Just curious what you guys think. Do you trade soft commodities? When I say soft commodities, I'm talking about corn, wheat, soybeans, cocoa, coffee, lean hogs, cattle. Do you trade those types of commodities in the futures market? And the reason I ask is it's not the same as trading shares of Apple or Intel or Microsoft, because we have elements that you and I look at on a regular basis. If I'm trading Apple, my life doesn't really change much. What I mean by that is if I'm trading Apple, I'm looking at business. I'm looking at economic cycles. I'm looking at how the U.S. is doing. I'm looking at jobs and inflation because I know that's going to impact Apple. I'm going to be looking at the stores. I'm going to be looking at their quarterly earnings report. So I have all this normal information to me. When you start trading coffee, corn, wheat, soybeans, live cattle, lean hogs, you have a completely different set of variables. And if you're someone who's trading cocoa right now, and you're not looking at weather patterns for the major cocoa producing areas of the world, you're fooling yourself, right? That's probably the most important piece is weather. Because if they don't get rain, they don't get crops. Now what the expectation is telling us is that this rain coming in from Africa might create a bumper crop, and we could have an abundance of cocoa, and therefore we're seeing prices down 19.9% today. Now I was really surprised when I looked at this chart. I was expecting to see lock limit downs, but I don't see lock limit down for cocoa futures. So I'm wondering if they don't have, I don't trade cocoa futures, so just letting everybody know there. Thought this was an interesting chart because normally when something is down, 10% or 5%, there's curbs put in place in futures markets, but it doesn't look like there was a lock limit down at any point today, even on a 1 minute time frame. They're very visible when something locks limit down, and we didn't get that today. So a monumental sell-off today in cocoa, almost 20% based off of simply rain coming to the west coast of Africa. So that was an interesting one. Now let me see what the results of that poll was. End poll. So 12% of you said you do trade softs. 88% said of you, 87% you don't. All right, cool. Those 12% that do, you understand the importance of looking at the elements that impact your investment. Again, I made the analogy of Apple here, which is easy because it's stuff we look at regularly. But if I'm looking at, let's say, lean hogs, okay? I don't trade them. I don't really trade softs because I don't have I think I have the aptitude, but I don't have the time to learn such a detailed microverse. Because if I'm trading lean hogs, I need to know who's the major lean hog producers in the world. What areas of the country are they in? And then you make this little list of what impacts lean hogs. Obviously, feed coming in, all right? So what's feed costs coming in? Are there potentials for contamination of feed? Are there regulatory pieces coming in? Are there environmental issues coming? All that plays into commodities, which makes it a very exciting field if you're a specialist, but also very challenging, which is why somebody like Don Dawson, who writes articles for Bar Chart as well, he does a great job of breaking down the commodities markets from that type of perspective, looking at the commitment of traders reports and understanding all the environmental impacts on commodities. It's a totally different world of trading, which I'll trade the futures every now and again, but typically I don't know all those inner workings of them. Sure, some of you might. Larry says, like soybeans, wheat, hogs, cattle, etc., sugar. You trade all that stuff? Wow. But so you, Larry, are you proficient? Like, can you tell me right now the number one soybean growing area of the world, county, region, province? Impacts that impact that specific area. I mean, that's a challenging market to trade. Anyway, thought you might like that one. Oh, and spreads only. Well, that makes it a little bit easier. That makes it a lot easier. For those of you who are interested in it, those are the types of things you have to pay attention to. And man, I mean, there was a tremendous opportunity today for cocoa, but I'm not touching that. And that's a dangerous one where I wasn't messing with it. And coffee, cocoa, you had some big. This is because of contract rollover. So when you have contract rollover, these are the monthly contracts for lean hogs. You might see this giant jump here. Right, you had a huge jump today. It was up 6.27%. I think some people might, wow, I could have made it. No, this is just contract rollover. Remember, futures contracts are pricing out something in the future. So when they roll from the current one to the next one, it's just that people believe that we're going to be higher in a month or 2 months, whatever that contract rollover is. Yeah, cocoa went up in the stairs and came down on the elevator. Yeah, it almost feels like they just jumped out the window. I mean, today was a jump out the window moment for cocoa, but yeah, it's definitely a slow process up and a big fast process down. Pretty fun. What else did I have before I jump into these overall markets for you? So we had the commodities, the rollover, we had cocoa, we had the question from Gary on GameStop and meme stocks. For me, I only have one thing on my radar right now. Every other trade I have is almost every other trade I have is expiring this Friday. I'm clear on all of those. I don't have any worries right now of really any of my positions, of taking any losses. I'm going to have some nice gains on the 17th. The only one that I'm watching very closely, and I have alerts set for tomorrow, well, set for today, but we never got there, is the ES. So you look at this S&P 500 today, we were pretty much unchanged on the session. And if you look at this last two candles, they're almost identical. Notice that Friday's candle, we hit an intraday high of 52.64. Today, we hit an intraday high of 52.64. Literally dead on. And it's, multiple days later. So that's an interesting one. And then look at the lows. The low for Friday's session was 52.32.75. Today the low is 52.33 and a quarter. So it's almost an identical candle. I can't tell you the last time I've seen this where literally 2 sessions look almost identical. We always say in trading, no 2 days are ever the same. Well, these two look almost identical, and I have an alert to at 52.32.50 is my alert on the ES, on the S&P futures. If we get down below that, I'll be short in the market tomorrow. Now, if you're wondering why don't I have a bracket order in there that says short at 52.32.50, why don't you just short right away? Because I want to see what happens in the overnight session. I'm not going to be awake at 2, 3, 4 in the morning. Hopefully I get some sleep. But when I do wake up and get to these markets, I don't want it to gap past me or have some crazy move that I wasn't aware of. So I don't put in the bracket orders personally on this one. I'm waiting to see what happens tomorrow morning on the open, and then I'll make my trade from that point. But it feels like, just based off this chart and what it looks like I'm going to be going short tomorrow. You might look at this moving average here curling up, and we have a nice uptrend for the past, couple of weeks to a month. But those are somewhat bearish candles. And, of course, the inflation numbers, which are going to happen an hour before the market opens tomorrow for PPI, will have a huge impact on that. Yes, I am. Big Ed says, are you still long Rivian? I am still long Rivian. I have the 1050 calls against my position. So let's go RIVN. So you can see that still have that horizontal red line there, 1050. I actually would rather keep my Rivian shares. So I'm kind of hoping that by Friday it stays at 1049. But if it does continue on up, then that's fine with me. I collected a lot of premium on the calls I sold. The premium was very high, surprisingly high for Rivian. So that's fine with me. If I get it taken away, I'll still make money. And if it closes at 1049, it gives me the opportunity to make even more. Because if it closes at below 1050 on this Friday, I'll reevaluate it, and I'll probably sell the 1150s or maybe even higher if the premium is good enough. I'd like to, if I can sell, let's say, the 1250s and get an extra 1%, then I would do that. Because I do think Rivian will probably continue to go higher here. I don't necessarily want to get rid of it, but I'd like to keep adding, premium to my cost basis and lower my cost basis consistently. But yes, I still do have my Rivian, and I'm long 2,000 shares of Rivian, and I have the calls at 1050 against my position. So I'm okay with that. I'd like to keep it, but if it goes away, it goes away. No big deal. All right, what's Tom got to say? Good afternoon, Tom. I occasionally trade cocoa, coffee, and USD. It's a complex trade triggered by honey. That's funny. Good one, Tom. On bar chart, will you update your AI stocks article? You know what? I feel bad. I have not written an article for bar chart since November of last year. It's just such a time commitment for me, and I have so many other things going on that I haven't gotten to it. Should I update it? I'm curious. We could have that discussion, Margaret, on kind of what things you think need to be updated. Obviously, bringing in new components and new elements to it would be good. Maybe we bring in, you guys may have seen the news on OpenAI. Did you guys see that? OpenAI is adding some new video and audio components to their program, making it easier and cheaper for people to use ChatGPT and OpenAI. I think that's a cool one. These language models getting better and better and better, but yeah. No, I need to start writing for bar chart again. I just, you like this stock? Rivian, Steve? You like Rivian? Hey, it's way better than something like Lucid. Check out Lucid. Lucid is one of those heavy, heavy short stocks right now. I mean, that's bad. And this is really the picture of what most SPACs look like. We can tell this is a SPAC by this flat horizontal price action at $10 for, as almost a year before it went up public, and then just all this excitement and then realization that it's trash. And I mean, they may make great cars, but ultimately this chart does not look good, telling you $2.81. But a lot of car makers look like this. NIO, which is not a SPAC, has a similar chart pattern to it as well. I remember Fisker. Is it FSR? Is it FS? Yeah, FS. Oh, and now it's FSRN. Gotta love bankruptcy. Nothing like a little bankruptcy to ruin your day. Yeah, there was Fisker, and it looked trash from here, right? This is another SPAC. Started at $10, rallied up to a high point of almost $32, and then back here in 2023, mid-2023, it looked bad. I mean, it dropped all the way down into $4. You're thinking, oh, this thing's terrible, terrible. And then all of a sudden, it really fell off a cliff. And now you're looking at 3 cents. Bankruptcy, this thing's done. It's going to go the way of the dodo, so don't touch this one. I do remember Fisker. The Fisker Karma, a really nice-looking vehicle, by the way. I think the Fisker Karma was when Tesla was coming to market, Fisker was their competition. Now, I don't know the mechanics or what happened with federal funding and government grants for Tesla and for Fisker, but Fisker's car, way hotter, very sexy car. Not a lot of great reviews, and now not a lot of good service because everything's going bankrupt on Fisker. So unfortunately, not good. What's your take on... don't know. I don't follow James Simmons' strategy. I'll look it up, though. My attitude on that one, Andres, is it's a good question. I don't follow anybody's strategy, and I don't care what anybody does. It really makes no difference to me what, who, where, why, or how you trade. I could care less. It doesn't make a difference to me at all. And I've had plenty of people over the years try to sell me their strategy and use this. When you go to events like the Money Show, which I was just at in San Francisco, that wasn't necessarily selling a strategy, but selling alternative investments. And a lot of those people on stage are like, hey, you need to buy into our oil wells, you need to buy into our copper mines, or you need to buy these annuity startup insurance companies. That's what you usually get at those stage shows. If you go to the Traders Expo, you get a lot of people that are pushing a strategy, and you have to pay to take their class to learn that strategy. Look, there's no new strategies out there. They've all been done. So yeah, I don't know. Andres, never heard of James Simmons. Don't know who it is. What I think I pride myself on is I don't really follow people. I don't really follow other traders. I have traders that I know personally that are friends of mine, and I bring them on the show, but they're not social media influencers. If I were to push and bring on a lot of these big name traders that have a big following, I could probably vault the popularity of this channel, but then I'd have to make a deal with the devil. And in that sense, it means I'd have to be working with some of these people who I don't necessarily like who they are. I don't like their principles. I don't like what their goals are. Their goal is just to take money off of people and as fast as they can get it. And that's just not who I am. You mean you don't like my strategy, Merlin? I love your strategy, Lori. Love it. I love all your strategies. If your strategy is making money, I love your strategy. If your strategy is losing money, I don't like your strategy, and I can probably help fix your strategy. I would say that's what I would prefer to do. Merlin, can you give your input on sell in May and go away? I hear conflicting views because of the elections years. Does that affect crypto? No, I don't think it affects crypto. So, Blue Diesel, there's a video. If you want to know the statistics on it, you go to my YouTube channel and just type in sell in May. You should see, I did a full show on it, which I'm not going to do this year, where I literally go through the month-by-month statistical breakdown of it. In summary, a little nutshell of that one, to squeeze it all together, the TLDR is historically the markets go flat to slightly down from May to September. It's just this 6-month window of time where it just goes slightly down. It's not a crash. When you hear that people say sell in May and go away, I don't know, I'm not speaking for you, I'm speaking for myself. When I hear that, I'm like, oh man, markets must crash then. Markets must just implode, sell in May and go away. Like, oh, it's got to be horrible. It's not really. It basically means that there's not a lot of excitement. Markets go flat to sideways, and maybe slightly down. That's the historical since like the 1950s, and that's coming from my favorite data aggregator, which is Stock Traders Almanac and the Hirsch family. So they do a good job of just looking at data and not making opinions other than what the data tells them. And what that means is if those 6 months are weak, then the other 6 months must be a really good period of time. So if you're looking to go long and you're expecting the markets to move up, buying in May is not the time to do so, right? It's like buying in October, November, and that 6-month window of time, you'll have much better gains based off historical data. So that's all I'll really say there. I love the mantra, sell in May and go away. I think it's losing its significance over the years as people realize what it really is. And why they would say sell in May and go away is because if you were a hedge fund or somebody had a lot of money, there's not a lot of opportunities in a sideways market. So you take your money out of the equity markets and you would move it into some other market, maybe the bond market or some asset class that was going to give you capital appreciation over that 6-month window of time. So there you go, Blue Diesel. Let's see. There must be another underlying going on. First, Steve Cohen, now Roaring Kitty. Yeah, Steve Cohen, it's a guilty pleasure watching some of the testimony, reading some of the testimony. I haven't really watched it, but reading testimony from the Trump trial. The Cohen one will be pretty interesting. He's actually going to be showing receipts for the stuff he paid. Was it based on the idea that Wall Street goes on vacation this summer? I think that has a lot to do with it. think it has a lot to do with it. But I don't know the factual underlying thing. And I think most of you can understand and appreciate that when something happens in the market, we can real quickly look and try to find what factors made that happen. And we can speculate on what those might be, but they may not be entirely true. I think that part of why these mantras work, the selling may go away, the Santa Claus rally, as goes January, so goes the rest of the year, those types of market mantras, I think there's a self-fulfilling prophecy in there where if you say as goes January, so goes the rest of the year, because you've seen that statistically over, let's say, the last 20, 30 years, and all of a sudden January is a negative month, you're like, uh-oh. In your head, subconsciously, it's telling you that the market's going to be bad, so you maybe get out of the markets or maybe short the markets or go to cash. And that creates selling pressure, which pushes those markets down. So I think a lot of it's self-fulfilling prophecy. I think a lot of it's definitely self-fulfilling prophecy. All right, what time we got? Let me go into our top 10 here, or top 8. We'll start at the bottom, work our way up to the top. I still have silver, which I want to see silver sell off. I want to buy more at lower levels. But gold today was interesting. 1.35% down day for gold, where silver did not have that type of sell-off. So there's your gold futures down 1.35%. Check out SLV. SLV was actually up 0.12%, so just barely up. Just barely up today, whereas gold was down pretty significantly. So an interesting one. The 10-year stuck in that yellow box. We'll leave that alone. No reason to spend time on this one until we get outside this yellow box. There's no reason to have an opinion about where it's going to go. It'll probably go sideways until it doesn't. I know. Trying to make it as simple as possible, folks. Your dollar index, again, sideways as well. I should have mentioned this on Friday's show. Did anybody in here really expect colossal moves on Monday? Not with a PPI number coming out on Tuesday. It's just kind of like, all right, we'll just wait and see. No one wants to get in front of that freight train right now. Now, interestingly enough, after that announcement tomorrow morning, the freight train is going to be moving all over the place. So a lot of volatility. Yeah, exactly. It goes backwards. PPI tomorrow and then CPI on Wednesday, where normally it's CPI first, then PPI, and a day between. They mixed it up and they did PPI first, and then CPI will be on Wednesday. So that's exciting. It'll be a lot of volatility. Be careful on the open, guys. It could be wild. S&P 500, unchanged. Again, we already talked about that. Looks just like yesterday. I love it. I love it. I want to go short here. And Powell will be speaking tomorrow. Amsterdam. Yeah, he's up in Amsterdam. I believe that's at 10 a.m. So that's when the market opens. I'll bring up the calendar here in just a second. You could probably see that in my Monday morning must-knows where I talked about Powell as well. But here you have the Russell 2000, which, we could put a box around this. It feels like it's just traversing sideways for 5 consecutive sessions. We had a nice up day to start and then gave it all back, closing right near the lows, up 0.22% for that Russell. NASDAQ, almost the same gain, 0.22%, although it was slightly to the upside. That was your bronze. Silver metal is crude oil, which is still flirting with that yellow box of demand down below. The more it hits it, though, the more it makes me nervous, right? The more time it hits that, it makes me a little bit nervous with regards to how that level holding there on crude. I'll still remain bullish until that level is broken. And lastly, Bitcoin with a little bit of a pop today. Still not feeling overly optimistic on it. We have been making lower highs and lower lows on Bitcoin for a couple months now. So until we break and make it some new highs, I feel like the highest probability is to the downside. That's the path of least resistance. So we'll have to wait and see if that pans out. But that's what I'm thinking right now. Having fun in Europe? You mean Powell or you? I'm sure I don't think Powell's going to go to the local coffee shop and smoke some weed in Amsterdam on his break, but he's probably not having too much fun. Although this time of year is when you start to get the tulip blooms in Amsterdam and Holland. If you haven't been, man, it's pretty crazy. Especially when you fly into Schiphol Airport, which is the Amsterdam airport. You fly over all these tulip fields, and it's just like stripes of yellow and stripes of blue and stripes of purple. It's really, really cool, even for people like myself who are colorblind. Okay, I see you asking for Alphabet, GOOG. And I saw another one back here, was it BYD? Someone asked me about a different stock. Hold on 1 second here. ARM, Lisa wants to know about ARM. Okay, so here's Google to begin with. Google at this point it's stay long, right? You've got moving averages trending to the upside, and that's just the one moving average. I usually don't have those on here. It's just kind of legacy. That's your 20-period moving average, but we could bring up the 20, the 50, the 200-period moving average. They are all pointing up. How do I know that? because I can go back over 200 days and see the trend has been up. So there's nothing really here that says go short Google. Today, you had an interesting day. It was gapped down pretty heavily and then rallied to the upside here. Now, I'm not saying that it respected this 20-period moving average, but it feels like it did in hindsight, right? At this point, I would be wanting to go long on Google and not necessarily buying at right now because we had such a big range day. Let me go off from where we opened today on Google to where we closed. It was a 3% rally. But at the end of the day in your Wall Street Journal, it says, oh, it's only up 0.36%. Well, it started the day off on a much weaker note. At least that's what it's showing here. Yeah, you had a pretty decent gap down, and the trend looks incredibly strong right now. I'm long-term bullish on Google. I'm long-term bullish on almost all of the Magnificent Seven. So if we look at our Magnificent Seven, I'm bullish on Tesla. Again, that's for the long term, right? Long term. Apple is the only one in this that I'm really not that bullish on. I look at the price chart here of Apple, and we really just chopped around and haven't done much for over a year. If you look at NVIDIA, I'm bullish on NVIDIA. Chart looks great. It's slowing down. We need to break the all-time high here on NVIDIA to really have that catalyst. We already talked about Google. Here's Amazon. I'm definitely bullish on Amazon, which broke an all-time high last week. And Meta. Bullish on Meta as well. So really the only one I don't like out of the Magnificent Seven is Apple. That's probably because I just hate Apple, period. All of this Google is tripping. I'm a long-term bull on this day. Yep, I agree. I think that they'll continue to do well. Chart looks absolutely fantastic. Could there be a pullback? There absolutely could, but until I would buy it, have a stop loss just in case you're wrong, and if you are wrong, then I would be selling puts and buying at a lower level. That's it. And the other one was ARM. Okay, two things on this one. I can't remember the individual. Somebody asked me, said, am I still short ARM? No, I closed that out. And you guys remember, why did I say I wanted to go short ARM? I wanted to go short ARM because there's 1 billion shares. I'll show you this date right here. There's 1 billion shares of ARM out there, and only 100 million could you trade. The other 900 million were locked up, and those all of a sudden came due. And I said, guys, when that comes to market, at some point it's going to sell off, and we got a really nice sell-off here. I had sold the $100, or I bought directionally the $100 call. I can't even talk today. I bought directionally. I went long the puts at 100. And I didn't get out this day because I was gone. I think that's when I was up at Fish in Vegas. But the next Monday, I closed out my position, when this thing was in the $90 range, which was a great gain for me. Loved it. I'm out, and I wouldn't short ARM right now. I like the technology. I think ARM's fantastic. I really think that ARM has a huge niche market in front of them, and they seem to be the leader in it. So I wouldn't feel comfortable shorting them now, knowing that window of time, the reason I wanted to go short ARM was because all these shares come into market. I got the drop I wanted. That's a pretty significant decline. I think you guys all agree. It fell a total of 33%. Yeah, I'm out. Loving it. Yep, NVIDIA is reporting next week as well, which we'll have a popcorn trade for next week, but nothing really that exciting for this week. So let me go here and show you some of the stuff that's happening this week. Let me go to your economic calendar here, and I'll wrap this show up for today. So there is your today's calendar updated. Not a lot happening for the U.S. markets. When we go to tomorrow's session, you can see here you got a couple red boxes. The main one is going to be the PPI numbers. They're expecting that to go from 0.2 to 0.3. If I'm not mistaken, that was actually 0.4%, but okay. They're expecting to see the producer numbers increase just slightly. If you look here at the chart of it, all right, that means they're expecting this to move up to the same expectation we had for last month. They expected it to be 0.3 as well, and we came out at 0.2. So maybe this is a case of set the bar lower than what you really think it's going to be. So that's the only thing you really have tomorrow. And again, here you see at 10 a.m., 7 a.m. Pacific, 10 a.m. East Coast time, Jerome Powell will be speaking in Amsterdam. I'm not too worried about that presentation, but if you start seeing really strange moves happening right around there, yep. Will you wake up early to trade the futures? I will tomorrow, Margaret. If I get an alert on my phone, normally I mute everything because I'm a nocturnal person. But tomorrow I have alerts set, so if those alerts ring through, I'll be up. I'll be trading that S&P on that break if it opens up above it and then drops below. If it gaps down below it, then I'm not worried about it when I wake up. It's got to open up above that level and then sell off for it to work for my style, my rules. So all right, we got your economic calendar there. Let's go look at your earnings calendar for mañana. You have some big names, by the way, but most of them are coming before the market opens. The big names are going to be Alibaba and Home Depot. Those are both before market open. And then there's some little stuff in here that is reporting at random times. Let's go Sony, you have it before the market open. You've got Nintendo, but you don't know when that's going to happen. And that's pretty much it for tomorrow. All right, that's it for me. I don't have anything else to speak about unless you guys have something you want to type in the chat. If you do, you can email me as well, TraderMerlin@gmail.com, or go down below any of my YouTube videos. Post your comments there, something you want me to discuss this week. I may reach out and see if I can get a couple guests in the program, because I know you guys like the guest. You have more fun when guests are on the show, so I'm happy to do that. I'll see if I can get some new people on the program, or even some old people. It used to be I had guests on every single day, and now I have them on maybe once a month. Seems like I have very few guests. All right, that'll do it for me, everybody. Thanks. Hope you enjoyed the show. Hit that like button, subscribe, share it if you want, and let me know what you guys want to discuss for tomorrow's show by emailing me. Again, emails on the screen, TraderMerlin@gmail.com. Take care. See you tomorrow.